The problem with so many people is they sell the flirt. You're great at talking to people, but you're never closing people. See, in sales, the money is in closing. In the book Rich Dad Poor Dad, Robert Kiyosaki says the key to creating legacy wealth is mastering the principle of my network is largely built around who? The rich, wealthy people, the Bill Gateses of the world, the Larry Ellisons of the world, the Michael and Susan Dells of the world, the Richard Bransons of the world. What I explain to people that want to work with me is my past helps define and build your future. And that drug is called hopium, meaning we hope that our situation will,
I love it.
Or we hope that we'll win the lottery. We hope that we'll get a raise or something like that. And that's never going to happen. You have to always be transparent with investors. Somebody asked me the other day, what do you do, Brad, with somebody when the investment just doesn't work out? You tell them.
Podcast, you don't want to miss it for anything. If you're a real estate investor, if you're into fund managing, raising capital, you don't want to miss this podcast for anything, right? We have Brad Blazar. For those who don't know him, he raised $2 billion. You know how many zeros there is in a billion? He raised 2 of them. More than 30 years of experience. He spoke at the multifamily conference in Toronto, Seth Ferguson conference that is organized every year. He's the real deal for teaching us how to raise money. So if you're a real estate investor, if you have deals and you're always having trouble raising money, pitching deals to investors, you don't want to miss this podcast, all right? We're talking about multifamily. You know what's multifamily? Here you go. Maybe you're going to learn on this podcast how to have access to family offices. What are they looking for? So you're going to learn so much, all right? And finally, it's an hour podcast. You want to stick to the end because I'm actually revealing some special information you will love to hear from me. All right, so stick to the end. Good podcast and see you on the other side. All right, Vlad.
Love it.
How are you doing?
Good. I'm doing great. It's fantastic to be here, man. I love doing podcasts. I love sharing what I know with other people. So I'm excited about our session today.
Well, thank you so much. I really appreciate it. So the way how I met you, it's in Toronto on Seth Ferguson, one of Seth Ferguson boot camps on raising money. It was a very informal boot camp. I learned a lot, but most even better than that, it's meeting the people. Meeting people. I met people that now we are friends. It's been less than a month. I mean, we are already friends. I met great people. So that's one of the reasons I love boot camps. I would love to invite you here in Montreal. That's for sure. So to introduce you properly to my audience, Brad, you've been in the business for a long time. You raised more than $2 billion. So you're an expert on raising money. You wrote a book. You have done plenty of podcasts. You're one of keynote speakers of the last multifamily conference. I'm really happy to have you, Brad. How are you today?
I'm doing great. Doing fantastic. Any better and I'd explode.
Perfect. That's great. So did I miss something? Did I miss something on your introduction? How long have you been in the business, Brad?
I've been raising capital since I was 21, so for a long time. But, really, as I like to explain to people, I've got a tremendous demonstrated capacity, teaching people how to attract, raise, and close capital from all sources. Think of me as the Tiger Woods or the Michael Jordan of capital raising, right? Tiger Woods picked up a golf club at the age of 5, and so that's why he's so good at what he does. And so, what I explain to people that want to work with me is my past helps define and build your future. You're over here at point A, you want to get to point B, but you don't know how to get there. More than likely I do. And so, my skill set and my talents are what attracts people to me because I know how to raise capital. I've raised well over $2 billion, and today we coach and mentor people in 28 countries around the world. But it gets back to exactly what you said. People have this burning desire to learn how to do this, but more importantly, how to do it the right way.
Tell me what's the benefits of raising money. Like people don't understand how good all the opportunity that comes with raising money, having deals on your way, making money as well. Obviously, what are the benefits of the guy who's known to raise money? Let's say in your city.
Well, think of it this way. I think most people around the world know they're capable of so much more. You know, it's like inside each one of us, we've got a dream, we've got a desire, maybe we have a goal. For each one of us, it's different. Maybe for one person, that goal is to start a business, or maybe for someone else, it's to own and operate a restaurant. Maybe for that third person, it's to invest and build a real estate portfolio. And they're stuck, not because of a limiting belief. They're stuck because they simply don't have the money or the resources to move forward and pursue that goal, that dream, or the desire. And so they just give up on it. And they kind of settle for whatever life tosses their way. This is the job I'm going to have for the next couple of years. This is the most money that I'll ever make over the course of my lifetime. And, you know, I say bullshit to that, because what we have to understand is we need to define the life we want. We now need to break that down into tangible goals to build the life we want. And we have to realize that every day when we jump out of bed, we're surrounded by all the capital we need to pretty much do anything in life we want and desire. We just call these other people investors. And it's unfortunate that in traditional education, right, going to school, they're on courses on how you find investors, how you talk to investors, or how you even put together a pitch deck or a PPM to raise capital from investors. But, you know, in the book Rich Dad Poor Dad, Robert Kiyosaki says the key to creating legacy wealth is mastering the principle of other people's money. Yes, we can do a lot of things on our own with the money we've saved and the money we earn, but we can get where we want to be so much faster once we master and understand the OPM game. Because I can teach people literally how to raise 5 million, 10 million over the next 12 months. That's life-changing money for most everybody. That's life-changing money. And then you do it again the next year and the next year. And, you know, maybe 3 to 5 years from now, you look back and you're like, holy cow, I'm sitting here with $25 million in a real estate portfolio. And because I structured it in such a manner where on the operator, I get 30 to 40% of this on the split, you're now worth millions of dollars on paper, and that's going to go into your bank account when those assets are sold and liquidated. And it just astounds me and amazes me that more people don't do it. And I think it comes down to a limiting belief. A lot of people ask themselves, am I really worthy of doing this? Like, am I really worthy of becoming worth $10, $20 million? And here's the thing. I was interviewed the other night by Eve. We were doing an Instagram Live. And I said, look, I'm not an overly religious person, but I know a lot of listeners are. And what the Bible says is we were manufactured and made in God's likeness. God made us in his image. So God has made you to be great. And so if you're in God's image and you were manufactured and created to be great, why are you not great? Yeah. You're average. It's just a mental decision. Yeah, it's just a decision that people have to make to move forward, take the necessary steps. Because I'm here to tell you, I've coached so many people on this very subject. Anybody can raise money. You just got to make the mindset decision to go out and do it now.
The first thing to do is, you need to believe that you're worth that table. You're invited to the table and you're able to do it. One of the small story I can tell you, PBD, Patrick Bet-David. I had a meeting a couple of months ago with him and his team. And before the meeting, I had a prep talk with one of his guys. He said, Serjan, can you believe it? You have a meeting with Patrick Bet-David. I'm like, yeah, of course. Like, yeah, I'm super happy. Like, no. Can you believe it? Like, are you ready? Are you ready for it? I'm like, yeah, I'm ready for it. I understand you're ready, but just make sure you understand that your worth his time. Now you deserve to be on that table. You deserve to be on that meeting, because some people, when they meet people that have a lot of enormous success, and when they have a meeting with those kind of people, they have some kind of insecurity. They feel like they're imposters, you know. So sometimes they don't really believe it, and that's something that, you know, it's really important to know is, you know, if you want to raise money. So the reason I'm saying is if you want to raise money, you need to understand, you need to believe in yourself. That's first thing. And one of the key factors about like raising money is you're actually making other people rich. So you're gonna attract a lot of wealthy people around you.
Right.
You're gonna have all those good deals. I just before the podcast, Brad, can you imagine? I just presented you a $60 million project, where, you know, those kind of project with big investors, well-known investor in Montreal. There, I have this deal. I have this trust to show it to you, present to you.
Right.
You know,
Right.
uh, so I'm pretty sure you have those kind of deals every day because of this brand that you built. So tell me, what are the common biggest challenges you face when raising money? Like, what are the things that you overcame in your early days when you were trying to raise money?
Well, you know, I'm not going to speak really openly about me because I've been doing it for so long. To me, it's like, you know, breathing or anything else. But for most people, I think it comes down to a couple things. I think number one, leads. Most people just don't know who to talk to. They don't have a lead generation system. They don't have a way to get people to opt in, so that each day they wake up and they have a list of folks that have expressed interest or have opted in to do whatever it is they're doing. And so we can show people and we can help people create the lead generation system, so that now you're talking to accredited investors, people with money on a consistent basis. I think that's one big piece of this. The second is an understanding how to go about this and do it the right way. The biggest challenge that a lot of people have is they want to raise money, they start talking to people, but they feel like they're just going around in circles because they are not following a proven blueprint. They're pitching the deal too early in the process, as an example. So imagine that, you know, I called you, or that we just met and I've got this great project I'm working on, and I say, Serjan, you know, we're working on a 150 unit property in South Florida and it's by the beach and yada yada. Well, when I'm done telling you that, more than likely you're going to be polite. You're going to say, well, it sounds like it could be an interesting deal. Can you send me some information so I can take a closer look at it? And so I send you everything. And then I follow up with you and you say, well, I got to talk to my partner, or hey, it's not the right time for me. What really you're saying is, Brad, like, we just met. You know, I don't trust you enough to move forward because you didn't invest the time in me to give me the opportunity of really getting to know you better. And so what people have to realize, Sarah John, is raising money from investors is not a sprint. It's more of a marathon. You got to slow down the process and follow a blueprint to give that other person the quality time they need to know, like, and trust you. And if you do that, your chances of converting people and getting people to ultimately invest with you is going to be enhanced dramatically. And you're going to find many, many more people that are then ready, willing, and able to do that.
That's awesome. Well, talking about investor relations, right? Like you're saying it's a marathon, right? So how do you build and maintain strong relationship with investors? What are the key factors that make investors trust you and their capital? Like right now, we met like maybe a month ago. We spoke over the phone. We exchange emails, and boom, I'm presenting a big project, Is that good enough? Do I have to do more? You know, with you, Brad, like how does it work? Tell me more. Am I doing the right thing?
Yeah, we are. And I think that, what sets me apart from some of these experts out there, this kind of shocked me, but I actually was at an event and, my good friend, Coach Michael Burr, who's probably one of the top 3 business coaches in the world today, guy's absolutely amazing. He was telling the audience, that a recent survey was conducted of everybody out there that calls themselves a coach. And there's roughly 6,000 people in the United States that call themselves a coach. The median income for this group is $62,500. Now, let me ask you, Sarah John, would you want to get business advice from somebody making $62,000 a year? No, probably not.
Of course not.
So the first mistake is there are a lot of people out there coaching that should not be coaching. The reason that people in our community have tremendous success raising money is that I break everything down into concepts because people can grasp a concept. Just like Jordan Belfort talks about the straight line method. People can understand that. Well, what I talk about is the trust sequence, the 4-step blueprint, the validation phrase. These are key concepts that when applied will bring certainty to the outcome, meaning you will raise capital. So let's talk about the trust sequence. This is how you build trust in another person. There are 6 steps. And so if you follow the blueprint, you'll be able to build trust with that prospect and hopefully get them to the point of investing. Same thing with the 4-step blueprint. If you follow these 4 steps, like Jordan's straight line method, you'll be moving people forward through a logical process to ultimately get them to hopefully invest. And so it all starts with perception. When we meet a potential investor, they're evaluating us, they're sizing us up, they're judging us, and largely what they're deciding is, will there ever be a second conversation with this person? Maybe there will, maybe there won't. Hopefully there will if you follow a proven blueprint and you do things the right way. And then from there, it's just asking questions, building the rapport, being a professional, just like you're doing interviewing me, you're asking good quality questions. And the more that other person talks and the better you listen, the greater the chances of you getting that person to invest with you down the road, because hopefully you're picking up on some mental cues and things they're saying. Maybe in the discussion, that potential investor says, hey, Sir John, I've got to put my 2 kids through school in the next 3 to 5 years. And so I really am looking for a way for my money to grow. If your investment benefits grow their capital, then that would naturally be something I bring up in the close when I say, hey, Sarah John, can you see how investing with us and this property is going to help you accomplish the goal that you shared with me and putting those kids through school in a couple of years? See, when they say, yes, I do, essentially they've closed themselves because now they can see the benefit of this investment is going to help them reach that goal. Money exchanges hands when problems are solved. Would you agree?
Of course. Of course.
Okay. So this is your problem. You're trying to figure out a way to put your kids through school. This is the solution to that, or maybe one of many solutions to that. So we got to be real keen on our fact finding and the questions we ask, because hopefully the potential investor will give you the answers to get those people to move forward.
Talking about the 6th step, can you summarize it? I know you just you explained to it the whole method. Can you summarize it? So perception.
You bet. So the trust sequence is really a framework in getting people to move forward, and it starts with perception. Okay. They like you. You look professional. You got a good website. You look good on LinkedIn. Then the second step is what we call temptation.
Temptation, okay.
This is where you're asking questions. Sir John, tell me about the best investment you ever made. What's the worst investment you ever made? When you do invest, what are you looking for? Income, growth, capital appreciation? What's your time horizon? What's your tolerance to risk? Are you trying to do something special with the money you're considering investing with us? How risk averse are you? I ask a bunch of questions. What do you do for a living? And so I'm kind of like a Marine or a person that works in the Army intelligence. I'm profiling this person, but I'm listening because I want to pick up on these mental cues that I can use later. Then you're going to get to the third thing, which is connection. Okay, we all can sense as we talk to people that there's a connection, a friendship developing. I like you, you like me. I see that you're following me now on LinkedIn. You're commenting on some of my social posts. And then you get to the fourth and probably the most important step. This is what I call the validation phrase or the validation step. Because if you pitch to somebody before you validate they trust you and they're ready to move forward in the process, they're going to say, well, send me the stuff, and you're going to send it, and then you're just going to be going around and around and around. So wouldn't it be great if there was a way to validate that someone is now ready to move forward in the process to receive this information and now invest? It's what we call the validation phrase. And by saying this sentence in a manner very similarly to what I'm going to say, you're basically validating at a subconscious level that, okay, I'm now ready to move forward. So what I say to people after I've talked to them 2 or 3 times is, Sarah John, like I've told you before, right now I just don't have an investment that I can really openly discuss and share with you. And the reason, Sarah John, is I always like to give my existing and prior investors the right of first refusal on most of the new projects and deals that we come across. But here's what I'd love to do. I keep a list on my desk, Sarah John, of all the people that have expressed interest. And I'd love to add your name to that list and give you a call back at some point in the future on something I think you can get real excited about. Does that logically make sense, Sarah John? Yeah. So when he says yes, he's inviting me to pitch him on a deal. He's teeing me up logically for that next step. So I'm going to go into my CRM and put some notes in there, and I'm going to schedule a call back in about 7 to 10 days where now I'm calling you back and I'm saying, hey, Sarah John, Brad Blazar here, man. How are things going up there in Quebec? Warm them up. Remember the last time we chatted, you asked me to put you on my list? Sarah John, it just so happens I'm working on a project I think you can get real excited about. And if you've got about 5 minutes, I'd love to share it with you. See, now I'm pitching. Why? Because he asked me to pitch him. You see the logic and how this progresses? So this is what we call the validation phrase. He is inviting me and teeing me up to pitch him by subconsciously saying, I trust you enough to move to the next step. So I pitch. Now I send him everything. Then I get to the next step we call attachment. After I answer your questions and I go through the deal, I invite you to invest with me. And here's the thing, I never use the word invest. Get the word invest out of your vocabulary. Why? Because the second I say, Sarah Jean, we'd love to invite you to invest with us, the connotation is he's asking me to get out my checkbook. So I don't use the word invest. What I do, much like I tell my sales team, we don't sell, we invite and we offer. So I'll say something like, Sarah Jean, man, I'd love to invite you to come work alongside us and offer you the opportunity to become our partner. Let me explain to you what that looks like. You see the difference?
Yeah.
Same invitation, but in a softer manner that doesn't create the barrier or the hesitation. Why? Because people love to be invited to stuff. It's like inviting you to a party. I'm inviting you to be my partner on this deal. Let me explain to you what that looks like. Our shares are priced at $50,000. So, Sarah John, how many shares were you thinking about? Were you looking to do 1 share, 2 shares? Are you capable of 3 shares? Of course, Sarah John, the other option is you could do no shares. And usually what happens is the mind starts racing for that investor. They might come back after a minute or two and say, well, I don't know, Brad, like, tell me what 2 shares or 2 units in your program looks like. Well, it looks like this. It represents this amount of ownership in the fund or the asset. Is that something that you're comfortable with doing today? Yeah, I think I can do that. Great. Then I just go straight to filling out the paperwork. I say, how would you like your name to appear on the enrollment papers? Okay. They just tell me, okay, your address. The problem with so many people, and I've got a great expression for this, is they sell the flirt. You're great at talking to people, but you're never closing people. See, in sales, the money is in closing. Guess where it's also at? In raising capital. In closing. Nobody wants to raise millions and millions of dollars and just sit there and flirt all day long. And unfortunately, a lot of people in sales are real good at sales, but they ain't good at closing. And there is a difference. And sales managers and business owners know there's a big difference. Are you a salesperson or are you a closer? Because in my business, I'm looking for stone cold killer machines. I'm looking for people that know how to close and get people to move forward in the process.
By curiosity, how many how many investors you got on your list after so many years in the business?
Oh, geez, my database is in literally the thousands. I've got one list of family offices. I've got another list of about 500 broker dealers. I've got another database of just, high net worth accredited investors. And so my list is siloed off into different buckets. So if I have a client that wants to hire me to do what? Build distribution with broker dealers and private wealth management firms, that is a database with hundreds of people that we can call. If somebody says, hey, Brad, I want to learn how to raise money with family offices, great. Here's my family office database. Again, hundreds of people there, names, addresses, emails, phone numbers, etc. That is another list. And then we have the ability to curate a list of thousands of wealthy people where somebody lives based on their zip code or where they reside. That is another list that we can provide and curate. So, when you do this as long as I have, and you have the relationships with so many people over so many years, you always maintain that database. And then what I do is I drip on these people through emails, through things that I send out through direct mail, just to always be keeping my mind and my name in front of them so that when I do have a deal, they know who I am. I never want to let my relationships go stale. I always like to nurture those relationships.
That's awesome. We were talking about family office. We're going to talk about at the end of the podcast. So please stay with us, listen to us, because he's going to give us a lot of golden nuggets. He already gave us about how to pitch to an investor. But we'll talk about on the other side, how to pitch a deal that you have, right? That's something that Blad specializes in. So let's talk about family offices. That's something that I learned earlier, like very, very late in my career, that there's rich people who have a family office to deal with their funds. So, that's when you made it, right? So imagine having millions of dollars and you hire someone who deal with investment opportunities. They look for investment opportunities. They are actually looking to invest their money, but the difference is they're not dying to put their money on the market. They want to make sure that they're doing the right investment because they're on the preservation of capital and not taking big risk. Can you tell me more about what's a family office? Is there a family office in every city? How does it work exactly?
So a family office is an office that's been created by somebody with lots and lots and lots of money to manage the personal affairs for that wealthy family. So think about somebody that that's worth gazillions of dollars, like who? Mark Cuban, maybe Michael and Susan Dell, the founder of Dell Computer, maybe Bill Gates, right, the founder of Microsoft. All these people have big family offices. And these family offices employ people that are on payroll. So they're handling everything for that family, their investments, their travel, their security, their taxes, their legal. And so, it costs a lot of money to run a family office because you're paying all these people to manage the hundreds of millions of dollars, or in the case of some people, the billions of dollars that that family has. And so that's what we call a single family office. They can make decisions quickly. They're very concerned about generational wealth, preserving the capital, passing it down to the kids, the grandkids, etc. Then a lot of people use the term multi-family office. And a multi-family office is really not a family office. I hate people that use the term, oh, we're a multi-family office. I'm like, bullshit. What you are is you're a registered rep, a financial planner, an RIA firm. Because if I came to you, even though you might say we're a multi-family office, you're using that term loosely for marketing, thinking it's a sexier way to say we are a private wealth management firm. Because if I came to you and you like my deal, could you write me a check for $10 million next week? And they're like, no. Well, why not? I thought you were a family office. Well, you see, we manage money for lots of families. I'd have to go talk to Mr. and Mrs. Jones, and they might want to put in $200,000. Then I'd have to go over here and talk to Mr. and Mrs. Tate about it. They might want to put in $500,000. And then I'd have to go over here, talk to Mr. and Mrs. Smith about it. They might want to do $150,000. So if you give me enough time, Brad, I could definitely raise you the $10 million. But they can't make decisions as quickly as a single family where the decision rests with one person or a small team. So this term about multifamily office really is being used by who? RIAs, private wealth management firms. But I love working with the single family offices. The events I go to, my network is largely built around who? The rich, wealthy people. The Bill Gateses of the world, the Larry Ellisons of the world, the Michael and Susan Dells of the world, the Richard Bransons of the world. Because I can go to their family office, bring a deal, and if they like it, they can fund the deal pretty quickly, but they can also connect me to other wealthy family offices or other partners that they've worked with before. Because it gets back to always asking for referrals. Remember, this is a big lesson for everybody listening to this. There are three types of capital in the world. Okay? We got the financial capital, which is the money that people can bring and deliver. We also have what I call intellectual capital. Let's say, Sarah Jean, that you sold your business 10 years ago, made hundreds of millions, and you did exactly what I'm trying to do. Why would I not say, Sarah Jean, would you be interested in becoming a member of my board of directors or becoming a strategic advisor to my company? Yes, I'd love to do that, Brad. See, that's kind of what angel investors do. They like to help other entrepreneurs because they've been there before. And then the third type of capital is relationship capital. Who are you connected with, Sir Jean, that I should also be speaking to? And now your mind goes, oh, I go golfing every week with my buddy and he just sold his company or he had an exit, or I live in a community and I can give you access to my directory. So three types of capital. Most people just focus on one. I believe we should be focusing on the other two, because the better connected you are, I believe you're sometimes one connection away from dramatically changing your life. Like when you talk to PBD, what was that conversation like with Patrick Bet-David? Who can he connect you with for a future potential interview? See, now if you went back to Patrick Bet-David or his team and said, hey, Patrick, I saw you interviewing Grant Cardone, or I saw you interviewing Jesse Itzler. Can your team introduce me? I'd love to bring Jesse Itzler onto my show. Before you know it, maybe now you're interviewing Jesse Itzler, or you're interviewing Brandon Dawson, or you're interviewing Grant Cardone. Not because you reached out to them directly, it's because Patrick or Patrick's team made that connection for you. That's a very, very strategic key thing, unfortunately, that a lot of people overlook.
Well, one of the reasons why a lot of people overlook, it's like you don't want to disturb them. You feel like you're not going to get the answer that you're expecting. Let's say, Brad, I want you to put in contact with some guy that you work really hard to get. they come up with papers, like, especially if they're famous. Like, I already got this counter objection is, oh, I signed an NDA. I can't really put you in contact. I'm like, really? Well, I'm pretty sure he'll be happy to have my contact because I have an amazing opportunity. I was willing to give him 100 grand. That's pretty much the opportunity, because a speaking gig for $100,000 that for my next conference. And since this person told me that he signed an NDA, he wasn't able to put me in contact with. But once again, the person that I wanted to meet, he's actually missing out on an opportunity because of the other guy, right? So it's, I guess, it's legal stuff, right? But again, can you really overcome it? It's all about, like, what's your opinion on that?
Yeah, I mean, I think you can certainly overcome it. I think that a lot of times, people get caught up in these limiting beliefs and they don't take action on certain things. So I certainly think that we can overcome it. The other big problem, I think, is understanding that wealthy people don't like to be talked up to. They like to be talked to, meaning you want to treat them as an equal. The attitude that we have to create if we're going to raise a lot of money is, I do this every day. Like, this is just part of my business. I talk to rich, wealthy people, and, some will, some won't. So what? I got a list of people that have expressed interest. There's always going to be someone next to talk to. If you like what we're doing, great. Let's have a conversation about it. If not, I realize that this isn't for everybody. But, as a capital raiser, you have to adopt this mindset that you're holding in your hand something that can benefit that other person. Like, if you do this, your money will grow.
Yeah.
So if I've got an investment, whether it's real estate, whether it's a business acquisition, whether it's investing in something like a Broadway show or the next major motion picture, why would I not want to share that with the world? Like, what I've got can benefit and help other people. So it's simply just developing the mindset to share what you're doing with other people, which unfortunately a lot of people are just real bashful and real stuck up. It's so funny that I was talking to people on a show a couple of weeks ago, and I said, man, I remember many years ago when I was much younger, we would know all of our neighbors up and down the street. We would have block parties where we'd invite people over. Hey, we're barbecuing this Friday night. Come on over. You bring some drinks, and hey, you guys bring some of the appetizers, and I'll be serving up some hot dogs and hamburgers. And man, for the most part, we would know like everybody up and down our entire street. And here now, living in the 21st century, we don't know the people that live more than one or two doors down from us.
Sometimes.
We might see them walking the dog, but all I know is the neighbor to the right, the neighbor to the left. But if you ask me much about the neighbors 3 to 4 doors down, I'd be like, I don't even know who the hell they are.
Yeah.
And, I see people that are on airplanes with their buds on, looking at a movie. You have no idea what the person sitting next to you does for a living. This dude could be worth millions of dollars. Why would you not want to talk to somebody on an airplane? You got him for 2 or 3 hours. I mean, I can't tell you how many millions of dollars I've literally raised just talking to the people that are sitting next to me on an airplane.
That's crazy.
Because eventually I ask them after we start chatting, so tell me, what is it you do for a living? They tell me, and I say, man, that's great. That's exciting. What do you do for a living, Brad? I teach people how to quit exchanging time for money. You see, I decided a long time ago I didn't want a job. Might that be something you'd have an interest in? Well, how do you do that? I invest in real estate, and it creates passive income. And before I know it, I'm on a Zoom or I'm talking to a person, and they're opening their checkbook and they're writing me a big fat check. But it's so funny that we live in a world today where we're so focused on just ourselves and our social media that we have lost the ability to engage and have conversations with other people.
100%. Especially on the Western side, Western world. It's much different in some other countries. And talking about limiting belief, I have this saying, when you share your knowledge or a person contact, you're not actually losing that knowledge and neither the person contact, right? So you're not losing it. So why not? Especially if it comes from someone who you trust, who does the work that he's saying. who actually took action, and you can see it. And obviously, some of the reason why you don't want to refer to some other person is because you're not trusting that person that is worth the other person time. But if the brand is built and what he's capable, I'm pretty sure the other person will profit from it, and he'll be even be thankful for it, for the referral you just gave him. Let's talk about strategies. Like, we're coming to the end. We have around 15 minutes. I don't want to take more of your time. Let's talk about. I wanted to go to the pitching strategies. What are the top strategies for creating a compelling pitch that attract investors? I'm sorry, not investors, but more deals. When you have a deal, okay. So one of the reason I feel like you're in a certain urgency to have investors is when you have a deal. We don't really think about it before, but when you have a deal, like, damn it, I wish I had more people, right? Right. No, but let's say you have a deal right now. I do have a deal right now. I do have plenty of deals every day. So in a situation like this, how do you pitch them to investors that they are willing to look at the deal?
So I think there's a couple things that we need to do in building the relationship. A lot of it comes to understanding psychology. A lot of it comes to understanding certain techniques in sales. And, one of those things that we need to understand is that as humans, the way our brain functions is we always tend to back away from anything that is fearful or scary or that, could create harm. And one of the most challenging things is whenever we are trying to make a decision about doing anything in life, the only way that we can make that decision is to look to the past. We don't know what the future is going to hold. So every decision we make, we look to the past, and that helps pre-frame our decision. So think about this. If you're trying to get somebody to invest and their investment experience in this industry has not gone well, maybe they invested in something in real estate 10 years ago, and real estate markets were very different back then than they are today, but they lost their money. They're going to pre-frame their decision, and they're going to say, well, I'm real cautious because the last time I did this, it didn't work. And so understanding the logic and the loop here, we have to make people understand that, I'm here to help you make a decision. The word decide means to kill off. We're killing off the indecision, and let's look to the future and what this can do. I always sell investments by taking the benefit and tying it to their need. Okay? Yes, there are features of an investment, but the benefit of you doing this is you will get these things that you have explained to me you need, want, and desire. Because now it's a much easier decision, you see. The other thing I think that we also need to understand is that in talking and communicating to people, we need to break down the barrier, knowing that most investors have concerns. So they're thinking in the back of their mind, okay, you're telling me about this multifamily or this real estate investment, but what if? What if this happens? And so there's some tricks that I can teach people to help break down those barriers. And one of the secrets to this is to openly disclose and talk about the risks in your presentation with people. So after I pitch the deal and I get them all excited and I create the FOMO, I say, hey, Sarah-Jeanne, I'd be real remiss if I didn't also talk to you about some of the potential risks here, because you and I are both smart enough to know that in most all investments, there are some inherent risks. So let me just share a couple things that could potentially happen. And then I talk about one of the risks. And then I say, if that did happen, Sarah-Jeanne, here's how me and my team would respond to that. And then I talk about another risk. And oh, by the way, Sarah-Jeanne, if that happened, here's how my team and I would respond to that. And here's why I do that. Because subconsciously now you're saying to yourself, wow, if they thought about those things that I was concerned about, they probably have also thought about the other three things I was going to ask them about also. And so they never ask. You see the logic to that? It's like you're the very first person that's ever tried to sell them an investment that openly talked about the risks, because most people don't do that. So it builds more trust naturally because you're being fully transparent. But now the mindset of that person is like, well, geez, if they thought about those things that I was concerned about, they probably have also given thought to these 2 or 3 other items I was thinking about it also. So they never bring those up. You now move forward right to the close. And so these are just things that over, 30 years of raising hundreds and hundreds of millions of dollars and being cast into all kinds of different situations, I perfected that I can talk openly and share with people to do what? Make them better capital raisers. Because like I said earlier, my past defines it helps you build your future.
Sorry, go on. I thought you.
So if you want to learn how to, amass and raise millions of dollars, does it not make sense to learn from somebody that's raised well over $2 billion? Of course it does.
Of course. And I was just going to ask you the next question: risk management. How do you assess and manage risk and while raising money? But you actually dive into it. Talking about examples of risk, like let's say I have a multifamily units to present as a deal. What are the example of risks that you will already foresee, and you can talk about it with investors? Can you give me a few examples?
Sure. Yeah. One risk obviously is just a change in the market cycle, right? We all know that, real estate is somewhat cyclical. There could be overbuilding and abundance of apartments that we're now competing with. And so, maybe our occupancy drops off a little bit. What would we do? Well, one of the things we can do is lower our average rental rates. Other things we could do is enhance the property, make it a more desirable place to live so that we attract a better quality tenant. That's one. Certainly another risk is just, the threat of any type of a disaster. What happens if the property catches on fire? What happens if there's a major snowstorm there in Quebec and the weight of the snow collapses a roof or something like that? Or, maybe a tree branch falls onto one of the property. Those are some risks. What about, maybe talking about a change in tax legislation, right? As you know, there in Canada, capital gains, 66% now. Here in the United States, there's obviously some pending legislation here. So that is another risk that we're not able to control. So, all of these different things are potential risks. What do we do if a tenant just doesn't pay rent? Well, this is a procedure. There's an eviction process. We can get that person removed. We come back in, we make ready the unit, and we can now lease it out to somebody else, hopefully at a higher rental rate. So, my wife is dealing with this morning. She sent me a text and said, hey, one of our tenants just gave us notice. They're moving out. I said, great. It's wonderful. She's like, why? Because the next tenant's going to pay more in rent. See, I always look at things from the bright side. I said, the next tenant's going to pay $100 more than these people do. Why? Because we're going to mark the property to market. But yes, we do got to go out there and probably clean it up a little bit and have it painted. There's a cost in that. But again, we have a security deposit to help offset that. But you have to always, I believe, be transparent with investors. Somebody asked me the other day, what do you do, Brad, with somebody when the investment just doesn't work out? You tell them. Because so many people are scared to have a conversation with an investor when things do not go the right way. Imagine that you're a surgeon and you work in the emergency room and you've got to walk out into the waiting room and tell a poor family that you weren't able to save the husband and the person died on the operating table. You know how challenging that must be for a doctor? Yet they do it every day.
Yeah.
So as a real estate entrepreneur or as a business entrepreneur, the ability to share both the good and the bad will build trust. When I was in the oil business, we used to drill dry holes. It's part of the risk. But I would share what we were doing daily with our investors when things maybe weren't going the right way, and they would continue to invest and continue to invest. And I was like, why are you investing when I just lost all your money? Doesn't make sense. And their answer was, Brad, because we know we can trust you. You're honest and you're transparent. We know that's one of the potential risks of the business. And we know the likelihood of the next well coming in and doing well is really, really high. So it's all about the trust issue. And so if people know that you're transparent, that you're going to talk openly about the good, the bad, and the ugly, they'll just keep writing their checks.
Definitely, yes.
Most people try to sweep it under the rug or hide it, and then that's where you get in trouble.
Yeah, especially if you have some losses on the investment side, you become stronger, right? You learn from it. Especially entrepreneur, we learn from our errors, our mistakes. So being a fund manager, and we know that, okay, this guy lost money. Here's what we done wrong. Here, next time, what we're gonna do, obviously, will reassure future investors. That's definitely something that is very true. But most people are scared to talk about their failures because they feel like some might think they're incompetent of their work. But it's a learning curve, right? And lastly, before I dive into the five rapid questions. So it's a small question that you need to answer as quickly as possible because we don't have much time. Advice for beginners, right? What advice would you give to someone who's just starting out in the world of raising capital? Someone who wants to he understands the benefits of raising capital. He knows that he can attract a lot of investors, a lot of deals, and he can make a good living based on that. And obviously, he's actually helping other people because there's a lot of people with money. There's a lot of people with money who don't have time to invest in anything else than just working on their industry. So you're actually giving them an advantage, or you're actually helping them to make more money, become richer, right? So because my belief before is those people, they know exactly what to do with their money because they have so much that people are actually coming to them to invest their money, but that's not the reality. And sometimes they don't even have time to look at their file. Like doctors, surgeons, they don't have time. Now, most of the surgeons are broke. Doctors are broke because they're not doing the right thing with their capital. Nobody taught them how to do it. Am I wrong? Or am I wrong with this, Brad?
No, you're not. You're absolutely 100% correct and absolutely right. And that's what we have to focus on. I think that for a younger person, some advice is number one, seek out the advice and mentorship of a coach or somebody that's been there, done it before, learn from them. I think number two is overcome the limiting beliefs and just take action and commit, start taking the necessary steps to move forward. And then number three is go out there and become a student of the business. Find a deal. Start driving around on the weekends, looking at properties. Start saying to yourself, how can I own and operate that? It could be a 4-unit property. It could be a 10-unit property, but start driving around and asking those questions. How can I buy that? Because I define that as going from point A to point B. Most people are here at point A. They want to get somewhere else, point B, right? That's the goal. One big question in getting from A to B is the who. Who can help me get there? And so if you ask those questions, maybe Brad Blazar is your who. I hope I am, because I know how to get from A to B. I know how to raise millions of dollars. And so you got to always understand that when you sit back and you are able to identify the who, that who has the skill set, the who has the blueprint. Now you just got to reach out to that person and ask for the help to go from A to B, rather than just staying stuck, giving up, feeling that you'll never get there and settling for so much less. Because remember what I said earlier, we all do possess the ability to be great and amass fortunes and create wealth. And what I picked up in a speech about 1.5 years ago from Ed Milet, who is a badass, just like PBD.
Yes.
Ed's only worth about $900 million, flies around the world in a private jet and has a beautiful little private island like Richard Branson has that he lives on. He said, you got to remember this one thing. In every rich, wealthy family around the world today, at one time they were poor, or they were struggling, or they were just getting by like everybody else. And then there was that one person that showed up, made everything different. One person created all that wealth. Think about it. Michael Dell was the person that has changed the history of the Dell family for future generations. Bill Gates has changed the history of the Gates family forever. Brad Blazar created the legacy and has changed things for me and my siblings and my daughter. Why can it not be you? See, once you understand that, and then ask the next logical question is, what is it that I can do to now bring about that change? You can now take the necessary steps to break it down and achieve that goal. And I thought that was a really, really great message, because most people just bob through life like a cork in the ocean, not really knowing why it is they're doing what they do. They exchange their time for money, collecting a paycheck, never creating or amassing wealth. But you need to look at the people out there that have done it. Study the Brad Lees, study the Patrick Bet-Davids, study the Albert Preciados, study those that are out there on social media that have the blueprint. Go to their events. We just did a great event in Nashville. We had almost 100 people there doing what? Getting my blueprint. Learning from me over 2 days. We'll be doing another boot camp in Toronto in November with Seth Ferguson, laying the blueprint for those people that want to have that success.
People are actually asking this question, Brad. Are you going to come to Montreal, do the same boot camp? And maybe I do. I will. Yeah, well, listen, actually, we've been talking about it over the phone. So maybe we'll have Brad in Montreal. It's in discussion. So guys, imagine in an hour podcast with all this nugget that he shared. Imagine how much can he share more in the in-person bootcamp. That's something that we're in discussion with Brad. Rapid fire questions, Brad, before we let you go. So if you have to go back in a time machine to young Brad, there's a two-part in this question. So bear with me. If you have to go back to your younger self and give you one piece of advice, you only have one chance. Don't mess it up. At 21 years old, Brad, what would you say to him so he can maybe go faster or go intelligently, whatever you want?
Mm-hmm. I say the one thing would be find a mentor. And take action on the things that you want to accomplish in life rather than dwelling there in indecision.
Brad, that's very important, right? So you have more than 30 years of experience. Imagine spending hours with you, especially if you want to raise money. The learning curve I will have, the advice I will get, so I can move faster, maybe get that 30 years in maybe a year of mentorship with you, Brad. So that's something that I value a lot, mentoring, getting mentored by someone who already done it. The path is already written, the success is already done by someone else. All you have to do is walk the same destination, right? And if you have to go back to the 80, 90 years old Brad, and he has to come back to your present age and give you an advice, what do you think that he will give you as an advice?
I think the thing is, we're on a very powerful drug, or a lot of people are on a very powerful drug, and that drug is called hopium, meaning we hope that our situation will.
I love it.
Or we hope that we'll win the lottery. We hope that we'll get a raise or something like that. And that's never going to happen. The thing to understand is that by leveraging other people, building those relationships, maybe raising capital, we can do much bigger things in life. And so, I always try to empower people and just speak into them and say, you are capable of so much more. You are capable of achieving your goals. But you're not going to sit there and achieve them by waving in indecision. You've got to create the blueprint. You've got to define the life you want. And then you just have to go out and take action.
Of course, definitely. And one other question is, do you? I'm sure you're a reader. Can you recommend a book that will really be appreciated by our audience on capital raising?
It's a trick question. You bet. It's this one right here.
Winning at the capital game.
Boom.
That's the number one book right there that I recommend. I'm just kidding. Well, I'm a 3-time author, so naturally, any one of my books. But I think that,
Can we get an Audible?
It's not yet on Audible, but we're working on getting it in Audible. But, Rich Dad, Poor Dad, Think and Grow Rich, they're all great books. Og Mandino's a great author. Love him. Napoleon Hill's a great author. Read a lot of his books. The key is just, get a good book. Relentless by Tim Grover, Flip the Switch by Coach Michael Burke. Just learn from others.
Well, thank you so much, Brad. It's pretty much, I went through all the questions. I really appreciate it. I think that we need more hours to go dive into a lot of small stuff. Really appreciate it. If people want to contact him, I will put his contact information on the description. And thank you again, Brad. I really appreciate it.
All right, Sir John. Take care. I appreciate you, buddy. We'll see you next time.
See you next time. If you like this podcast, smash that like button. It will help us reach new people. And also comment your biggest takeaway so I know I'm doing the right job so I can do more content like this. And lastly, if you know someone who would love to see this content, feel free to share with them. It will be really appreciated. Thank you again for watching.